Welcome to the top-down professional analysis system on Bunnex Investment Group. I'm going to teach you how to analyze like a professional using levels as well as all other techniques for you to get an entry that comes from the higher time frames. Markets always gives clearer pictures on the higher time frame. You find out that when you are trading the M1 time frame without the higher time frame bias, you're likely going to be trapped within the choppiness of the markets because it will definitely try to achieve what it wants to achieve on the higher time frame. To properly trade on the smaller time frames, knowledge of what is happening on the higher time frame is fundamental. If you do not know what is taking place on the higher time frame, you're likely going to lose a lot of trades. You must be in a habit of checking the higher time frames before making entry decisions on the smaller time frame. So this basically comes down to the fact that if you do so, you're definitely going to keep on cashing out from the markets. So basically, before we move forward, please check out my free Telegram channel. I'll leave the link in the description box below. In this channel, you're going to learn how to trade. I give tips as well as I give motivation as well as setups and here and there some signals. So be sure to be part of this particular channel where you will actually learn how to trade these systems professionally and consistently. Alright, so basically the top-down analysis actually uses several time frames. We are saying the daily time frame sets the tone of the market. The H4 time frame gives you the weekly arrangement, that is, it gives you the weekly peaks, midweeks, and so forth. The H1 and M15 give you the entry clarity. So basically we are saying this all boils down to these particular illustrations. We are saying trend, key levels and bias is actually obtained from the daily time frame. Zones and confirmations is actually obtained from the H4 time frame. Then from we are now moving from macro to micro, where we are now aligning all time frames in one direction for high probability trading. With that, you can now calculate your risk with high precision. So let's now delve much more into this stuff. So we are saying the time frame flows looks like this. On the higher time frame, which is the daily time frame, the market may actually represent a V like this. We are saying the market has reached a reversal point on the daily time frame and has started to shift to the higher, to the upper side like that. But on the H4 time frame, we can see there are these swing lows, swing highs being issued. And if you are not aware that we are going to the upside, probably at this particular point, you are going to sell for the long term, anticipating the market to create another low like this. But the daily time frame will be there to actually guide you that we are not going to create another low like this. So if you are going to be focusing only on the H1 time frame, this is definitely going to be a different picture. That is when you would say, when I sell, the market buys. When I buy, the market sells, because you are not aware that we are going to the upside on the higher time frames. And within these particular flows, probably since this is actually a high, you are going to anticipate that maybe at one of these highs, the market is going to drop, and you are always taken out as the market is doing its thing. So these actually allows you to understand that whatever that we see on the smaller time frames is basically a magnification of what is going to be issued with the higher time frame. We say the smaller time frames are the building blocks of what the higher time frame wants to achieve. So that brings us to levels. And levels are the backbone of top-down analysis. We cannot talk of top-down if we are not going to talk of levels. And in this particular video, I'm going to give you a step-by-step guide on how you are going to count these levels, how you are going to move from one time frame to another, and how you are going to reach the micro point of entry. So they help us attain bias of the market as well as find entry points. We can see that in this particular case, we have this as the higher time frame and this as this lower time frame. We are saying whenever you look at any chart of your choice, we always assume that in one level of that particular time frame, we are expecting 3 levels of its preceding time frame. Levels are defined as impulsive rises or drops. Consider levels as an advanced way to view market structure. Market actually gives us higher highs, higher lows, like this. Higher highs, higher lows, higher highs, higher lows. So these impulses, your clarity to see these impulses clearly actually gives you the ability to count levels properly. So 3 levels completes a cycle. Whenever we get 3 levels in an upward direction, we actually say the market maker cycle has been completed, and whenever 3 levels have been issued, we expect to see the market to reverse. So like what I've said earlier on, in one level of any time frame you are looking at right now, always assume 3 levels of the preceding time frame. We are saying the preceding MetaTrader standard time frame. There are the time frames like H3, H2. No, we are actually talking of the MetaTrader standard time frames: M5, M15, M30, H1, H4, daily, weekly, monthly, like that. So we are saying now, whenever we actually get a higher time frame, this is a level which is basically a swing to the upside. Within that level, if we look at its preceding time, we are expecting to see 3 levels within this particular level. So if this is H4, on H1, we expect to see level 1, level 2, level 3. If this is H4 level 2, we also expect to see 3 H1 levels within that particular H4 level, and so on, basically like this. So let's now talk of the or how we are going to approach the top-down analysis with the knowledge that we have talked so far. So top-down analysis will go through these steps. Step 1 that you're going to be doing is look for the previous cycle where the daily time frame issued a complete cycle. So in any chart or any trading instrument, you are going to look for a complete cycle on the daily time frame. From that complete cycle, what did the market do next? What did it do next after completing that cycle? That is where you are going to attain the bias. Step 2, we are now going to check where you are after that completed cycle was issued. We want to see 3 levels of the daily time frame before we do anything else, so that we actually build bias. Step 3, we are now shifting to the H4 time frame to verify the levels if that particular daily cycle was actually complete or not. Step 4, we are now looking for entries on H1 or M15. I understand that this may be something that is difficult to understand without viewing the charts, so we are now going for the examples on real charts so that I can illustrate these steps right in front of you. But before we go over the examples, here's our trading robot called the Stophunter Pro. This is an automated trading method where you can actually pass prop firms, grow your small account from 250 going up, practice proper risk management. For you, we know that a lot of you are not consistent, 50 to 60% accurate, and from testing it actually turned 1K into 500,000 in 5 years. This copy or this robot is going for 249 lifetime, no recurring payments. You just get it and you plug it on your MT5 and you are good to go. Let's now go over the examples. Alright, so basically for all those who follow this channel, they know that my charts are set up like this. These are the default EMAs as well as the TDI that is under on this particular sub-chart region. Okay, so this is Canadian against JPY. We are going to illustrate using the steps that I have illustrated on the slides. We've said the first thing is always to start off by looking for 3 levels that were once issued on the daily time frame, so that we build the market bias. So in this particular case, I'm going to use rectangles like what I always do to mark the impulses or the swing highs. We can see that we had a swing high here or a higher that was issued after breaking this W pattern neckline, right? So we had 1. After 1, we broke this high. 2. After that 2, we had 3. So meaning that this is a completed cycle on the daily time frame. And what have we said the daily time frame is for? We've said the daily time frame is to give us bias. What is taking place after 3 levels of move have been issued? We've said the first thing is we make a reversal. A reversal was made, and for that moment the bias was actually to go down, right? Whenever we get 3 levels to the upside, bias will be to go down, but to exit or to terminate that bias at the 200 EMA, where most of the resets occurs. What are resets? These are cycle restart points where we actually become much more skeptical of trend continuation, but there is also probability to see trend restart. So in this particular case, it shows that there is a probability that a trend restart was issued. We've said daily time frame is to build bias, and we've built our bias. Bias is upwards like that. So what next? Next, we are now going to the H4 time frame to see what happened. We can see that there was a big W pattern with this particular support point. And after having that, what's next? Since our bias is actually going to the upside, we now go to the H1 or to the M15. On H1, this is how it looks like. We are coming from this particular low. We went to the upside. Our entry was going to be 1 on this particular 50 EMA as an ID50, high probability ID50. Why? Because there was top-down analysis from the higher time frames going to the smaller time frames. Or we could actually look for W pattern on the M15, which was not issued properly. But we are saying on the M15, either we were going to get this as a stop and low rise entry where we had a shark fin on this particular point, and we are actually going to the upside as how the daily time frame has dictated. Okay, so let's now have another example so that you fully understand. This is Euro NZD on the daily time frame. We've said cycles may also restart at the 200 EMA. And in this particular case, we've said the first step is to always try to find a point where the market gave us a complete cycle on the daily time frame. We can see that there was this rise, high was issued, another high was issued at this particular point, so level 2, and then we had another level like this to the upside. What did we get? We got a shoot to the upside, which was this one. How does this occur? We actually call this divergence. Why? Because on the TDI, we can see that the first point was here and the second point was inside bands. This is whereby the market makers are actually manipulating so that you'd feel confused. So this is divergence of the market price action and the market TDI. We also call this whole region above this first leg as a page, right? So after that, we can see now that we had 3 levels to the upside and the market reversed for a short period of time. It failed to reach the 200 EMA, but the cycle was started again. We can see that we had the fresh cycle as this particular point, level 1, and we had level 2 like this as swing highs, higher lows, and we created a new low. What is our bias? Bias is upside. And can we check if these are actually correct levels since it's in the middle of a new cycle? We can check with the H4 time frame. What happened within the H4 time frame? We've said one level of the daily time frame is equivalent to 3 levels of the H4 time frame. Level 1 like that, level 2 like that, and then we had level 3 like that, and an M pattern that actually stretched like this: first leg, second leg, and a cycle, a new cycle restarted. From that new cycle, we had level 1, which was this high and its low, level 2, which was this high and it's low, and then we had level 3 like this. 3 levels to the upside, and the cycle restarted. From there, we actually have been issued. We can see from this point there's actually a stride to the upside. What are we waiting for? We want to see a low being issued, a low that is where we actually wait on H1 to find that particular entry. Unfortunately, we cannot go deeper into entries on this particular video. Why? Because the video will actually be long and it won't be very much compatible for YouTube. But if you want to actually simplify this whole concept, make it very simple that you can actually do everything coming out of your sleep, we have this particular way of doing it, where I will teach you step by step on how to become a professional in doing this and executing all these steps in the one-on-one mentorship for serious traders only. I want to personally invite you to my one-on-one mentorship, and if you are serious about turning your trading into a powerful and sustainable source of income, this is for you. I only take one-on-one on a first-come, first-served basis. Use the link that I've left in the description box below to actually secure a seat for only serious traders only. I don't want time wasters, and if you know that you are not ready to actually do this professionally, please do not waste your time contacting me. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and check out our free educational Telegram channel that I've showed you earlier. The link is in the description box below. See you in the next one.